For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by Nate Kreinbrink Financial Advisor at NelsonCorp Wealth Management. Great to see you, Nate.
Appreciate you having me on.
Okay, with so much talk about a recession this year, what are you watching to provide some perspective?
Well, there's plenty for investors to be concerned about that have led to the conversation of an economic recession. You have high interest rates, inverted yield curve, high inflation, slowing retail sales. Now, as this relates to the stock market, a key, whether we're in an economic recession or not, will be earnings and profit margins. Now, generally speaking, when earnings and profit margins are high, stock performance has been above average. And I think we've got a chart that kind of outlays this. And what we're looking at here are the S&P 500 companies and their margins. Now, if you look at the far right there, you can see we've had a little bit of a pullback in margins. However, we're still hovering right around that 11% mark, which again, historically, we're still at record levels. With time period of high or elevated inflation, these larger companies have been able to sustain their pricing power and their margins throughout these levels of high inflation.
Okay, so what could this mean for people watching at home and their investments?
Well, we've talked on this show before that stock markets and the economy are not the same. And this is especially true with larger companies like those in the S&P 500. So although there's been some data points suggesting an economic slowdown, it's important for investors to continue to look at additional items that provide more context, earnings and profit margins. Because again, it's not uncommon for the economy and stock performance to be out of sync. So by looking at additional items, it'll provide them with more context.
If you missed any of our discussion, we'll make it available for you on ourquadcities.com.